Hello, this is Corner Invest. Today I'll be talking about the stock market sell-off and stocks at 52-week lows that are worth a look at right now. So we are officially in correction territory already. The stock market is down around 10% from all-time highs already, and you have stocks like Meta trading down 4% today, Adobe trading down 13%, and yeah, everything is selling off today. So let's talk about a few stocks that are at 52-week lows that are worth a buy right now. So let's talk about the first stock, which is Adobe. So Adobe just released their earnings today, and they beat on both the top line and the bottom line. But the problem with Adobe's sort of like earnings was their guidance. They didn't manage to increase their guidance from previously. So in the previous quarter in Q4, they basically guided down, and then as a result, the stock tanked. And the markets were expecting a guide up in this quarter, and they kept their guidance basically at the same level as in the previous quarter, and that's why the stock is selling off today. So if you look at Adobe stock today, it is currently trading at around a 24 times of earnings. And if I'm not wrong, it is trading at around a 20, yeah, correct. So 24 times earnings. And then if you have to look at the price to free cash flow as well, it is trading at around 17 times price to free cash flow, around a 25 times stock-based comp adjusted price to free cash flow. So for me, the problem with Adobe is it is a declining business. It is a quality business, don't get me wrong, but it is a declining business that is sort of like growing at around 10% every single year. So for Adobe, the buying price will be around a 20 times earnings. I want the company to be trading at 20 times earnings. That will be a comfortable spot for me to add to Adobe for sure. Because for Adobe, you still have the 10% organic growth, regardless of whether or not you have all your different AI and all your competitors coming in. You have 10% organic growth. And then if they do buybacks as well, which they've been doing quite a lot in the past few quarters. So let's take a look over here. If you have to look at the buybacks, yep, they bought back around 2%, 3%, and I expect them to continue doing so. If you can buy back around 3%, organic growth is around 10%, some margin expansion as well. You could easily see a 15% EPS growth for Adobe for the few years ahead. And if I can get this company at the 20 times of earnings, that is just a steal in any single metric. So this is the first company that is at a 52-week low. Next company is Microsoft. So Microsoft currently is officially at its 52-week low. So you look over here, 378, and then 52-week low is around 376, which it hit just earlier. And so for Microsoft over here, in the past 1 year, it is down around 5%, I believe, 8%. So it stayed flat for the entirety of the past year already, and it's currently trading at 30 times earnings, 27 times forward earnings. So for this company over here, I think it is one of the most predictable businesses out there because they grew their earnings in 2022 as well as 2020 as well. Even though there was a tech crash in 2022 and then there was the COVID-19 in 2020. If you want to own a Max 7 company that is extremely predictable, that can give you basically market returns or slightly above market returns, then I think Microsoft is one that you can look at right now. This company over here, it's incredibly predictable. It is a decent buy right now, so go and look into it. Next stock at its 52-week low is Ulta Beauty over here. So I'm saying this before Ulta Beauty's earnings. They're going to report earnings in a few hours time. So for this company over here, it's currently trading at 12 times of earnings, 13 times of forward earnings. So basically for the management, their long-term guidance is they want to buy back about 6% of their outstanding share every single year, and then you combine that with some inflation as well as some real growth. That is around a 10% growth for this company already. So 10% growth, 12 PE, that is extremely cheap. I own quite a fair bit of Ulta, a few percentage here and there. And so for Ulta Beauty, as you can see over here, in 2020 when we had the COVID crash, the revenues actually grew. So the revenues grew even during the COVID crash when everyone was in lockdown, and it pulled back in 2021 because everyone started because we had all the lockdowns and all that. So for Ulta Beauty over here, I think it is a compelling buy right now. It is a company that is trading basically pricing in for like no growth for the next few years, and they've been buying their shares back relentlessly. So as you can see over here, 4% buybacks. And if you look at their free cash flow, they're basically using all their free cash flow to buy back shares. So 995 million of free cash flow, 995 million, and then the market cap is around 14%. So 14 billion, sorry. So 995, that is around 6% buyback yield, 7% buyback yield. So if Ulta Beauty can buy back 7% of the shares, if they can grow 2 to 3%, and then if inflation is another 2 to 3%, that is easily a 10+% for Ulta Beauty already. And for 12p over here, I think it is a no-brainer. Stock that is trading at its 52-week low is AMD over here. So AMD is currently trading at literally its 52-week low. It hit its 52-week low, I think, a few days back. Yeah, so a few days back it hit its 52-week low. So for this company over here, trading at 97 times earnings, 20 times forward earnings, the problem with AMD is you will always have the Nvidia headwind, because Nvidia is the company that is able to produce greater chips, have a greater ecosystem under CUDA. And for AMD over here, their data center revenue isn't growing as much as Nvidia. And for AMD, the only story that is possibly going for them is that they can increase their data center revenue, which they haven't been doing so already. So you can clearly see the discrepancy between your Nvidia as well as your AMD. And for AMD over here, although it's trading at 52-week low, I wouldn't consider this one, because if you were to look into Nvidia's valuation, so AMD is trading at 20 times of forward earnings. Let's take a look at Nvidia's valuation over here. So let's take a look at Nvidia over here. Nvidia is trading at around 27 times of forward earnings. So you pay 7%, 7 points more for a much higher quality business. I think Nvidia is a much better buy if you want to consider a chip stock now as compared to AMD. Last stock that is near its 52-week low is ASML. So ASML over here is currently trading at 35 times earnings, and it is near its 52-week low. And for this company over here, it is an incredibly monopolistic business. It holds the entire EUV market. It has around 80% of the DUV market. So you just imagine a scenario whereby if let's say ASML can't sell the machines to US and they can only sell the machines to China. So let's say if we were to reverse the roles now, let's say if ASML just does business with China, it will be a national security issue for the US, because ASML is the only company in the world that is able to produce your EUV machines, to produce high cutting edge chips for all your AI data centers and all that. So for ASML over here, it is a company that is basically at 52-week low. It's a quality business, currently trading at around I think 30 times price to free cash flow, if I'm not wrong. Correct. So 28 times price to free cash flow, that is one of the lowest points in its history. And I think for ASML, the thesis is just extremely simple. It's just a thesis of AI continuing on its path for the next few years. And if you want to bet on AI, I think ASML is one of the most predictable ways for you to bet on AI. As for the markets in general, we had a PPI report today. The PPI report came in a lot cooler than expected. It showed some deflationary signs as well. So that is possibly what is causing this shock in the markets today, and that's why we're down around 1.5%. I do believe that if we go into a recession, we could drop all the way down to around $458, which is around the 200 weekly moving average over here. So if we ever go into a recession, the downside from here will be around an additional 16%. But if it's just a normal correction, then I think it will be all the way just down to around $520, which is the end point of this correction over here. So another, would say, a few percentage more, maybe around 7% more. So buy the dip, continue buying the dip. We could go a lot more down, so buy in tranches, just buy on the way down, and that's what I've been doing for the past few days.